Fast fact: more than 30 states permit people to gamble online, yet 1/3 of young people don't know the difference between a debit and credit card. I'm Drew Thomas, and you're listening to Bank Chats. Do something a little bit different, I think. This is a full-length episode of Bank Chats.
Yes.
That typically has a guest and we talk about some particular topic or whatever when it comes to banking. And while that is fine, and we're going to keep doing that, I think that this is December. It's a little lighter for everybody. And we've been doing Bank Chats now for how long? It's been
over a year.
Over a year.
Yeah.
And we have some really good content out there, but we also have a lot of newer listeners that didn't get on the train right at the beginning.
Yeah.
And so we thought that this actually might be a good opportunity to revisit some of our previous topics, but by doing it in a way that we've seen done online.
A recap, yeah.
But by basically stealing other people's ideas and using them as our own.
And that means you're stuck with me as your guest for the day.
That's okay. I'm all right with that.
Okay.
For those people that only usually listen to the 2 cents, now you're going to get a full-length episode of Jeff and myself talking about this stuff. And you've seen those videos online. They usually do them with celebrities, where they'll ask the most popular Google questions about...
And they strip off the tape over, hiding the question. Yeah.
Yeah, so they'll ask Sly Stallone, like, what is... And then they'll take off the thing and it'll say, your favorite movie that you've ever done or something. And then he'll talk about it. Yeah,
Oh, yeah.
And he'll say, Rambo. I can't do that very well. It's everybody makes fun of Sly Stallone, but honestly, the man had a speech impediment when he was a kid and learned how to do. Anyway, I digress. So let's go through some of these things. So we went through and we did the who, what, when, where, why, and how of questions that are asked, most popular questions that are asked of Google. So who do banks, what do banks, when do banks, that sort of thing. And then the 3 most popular questions for each of those categories.
Yeah.
Right?
Yeah.
So what do we got first? I guess we started with who. Right. So who do banks answer to?
Ooh, banks answer to the FDIC for one.
Yeah.
And
if you're FDIC insured, which most banks are.
Right. And we actually covered that on episode 6 of 2 cents.
Nudge, nudge, wink, wink.
Wink, wink.
Yeah.
Maybe we'll throw a little clip down there.
So the FDIC was created in 1933. And it was basically done after the rise in bank failures that were happening during the early part of the 30s, the Great Depression going on, right? 1929, the stock market crashed. And there were a lot of people that were taking their money out of their banks. And the banks were failing because they didn't have enough money to cover their losses or cover the deposits they were holding.
Mm-hmm.
And it really led to this rise of a lot of people sort of not being comfortable with the security of their money in banks, right?
Mm-hmm.
So the federal government actually made every bank close. And then there were new rules and regulations put in place in terms of the governance of deposits that were held at the banks. And the banks had to agree to those new rules and regulations before they were permitted to reopen.
Oh.
Right.
By the way, all of these episodes that we reference will be in the description. We'll have a direct link to them so that it's easy to find.
Very cool. Yeah.
But banks also answer to the Office of the Comptroller of the Currency, or the OCC.
Okay.
That they issue all of the regulations and rules that banks have to follow.
Gotcha. So yeah, that makes it, and to some extent the Federal Reserve System too.
Yeah.
Because you have to have a license or a charter to be a bank. You can't just stand out on the street corner and call yourself a bank. There's a lot more to it than that.
Oh yeah.
And there's some real discussion happening right now, and this might make a good episode for next year whenever we start getting into 2025. Talking about fintechs and what a fintech is.
Yeah.
Because there's a lot of question about whether or not some of these financial technical companies,
these hybrids,
are really allowed to do some of the things they're doing, because they're doing a lot of the same things that banks are doing, but they're doing it with less regulation.
Oh yeah.
And so there's some real question happening now with some of these fintech companies as to what they really should or shouldn't be doing in the world of banking. So that might be a little teaser for somebody in our back pocket. Yeah, we might talk about that next year. But But yeah, so that's who banks answer to. That's the short answer anyway.
Yeah.
Yeah.
Okay. Who do banks borrow money from?
Oh yeah. So believe it or not, banks do borrow money from time to time. So generally speaking, a bank will, and we'll get to this, I guess, maybe a little bit later, but banks make money on the interest that they charge on loans
Mhm.
primarily.
Right.
But the banks are also required to have a certain amount of reserve requirement. So in the 1930s, banks were not required to hold a specified amount of cash in reserve relative to their deposit liabilities. And then following the stock market crash of 1929, there was a run on banks and they had to shut banks down, and it was a whole big thing. And we still have the original signed charter from 1933 when our bank reopened under the Federal Reserve System that said that we were, a solid, liquid, stable bank.
Yeah. Oh, I'd like to see that. Yeah.
I'll show it to you. It's in my drawer right over there. So sometimes banks will borrow money from the Federal Reserve Bank in order to make sure that their ratios are right. We have to have a certain amount on deposit for how many loans we have and vice versa. So sometimes the bank will borrow money, usually overnight, to cover, just to make sure everything's legal and that we have enough on deposit to meet our requirements.
Yeah. Bigger banks are required to have something like 30 days to cover payments.
Yeah.
On hand.
You mean payments for the bank, like their light bill and things like that, or
No, they're loans.
right? Okay.
Yeah.
So I mean, there's that, and then they can borrow from other banks, I guess, too. I mean, it gets to be a really complicated question. I think Jeff Stopko actually talks about this a little bit in his one episode.
Theoretically, you could lend 100% of our deposits out. Okay. Take for every $100 we take in, we lend out. It gets more difficult to do that the closer do you get to 100%. But we very much want to lend those deposits back into the economy because that helps a local economy. When people are borrowing money, when businesses are borrowing money, that means they're spending. And spending is an important tool in our economy. So, yeah, it gets more difficult when you get to, we'll call 100% loan to deposit ratio. But as a community bank, AmeriServ, we typically have been running with a loan to deposit ratio of 85 to 90%. So that means out of every $100 we take in deposits, we're lending 90 back out.
Yeah.
That's a good ratio. That means we're supporting our economies. We're helping people buy their home. We're helping a business expand, which is important to the economic viability of the area you live in.
And that is episode 12, Interest Rates 101.
Yeah.
Yeah.
So I think, we talked primarily about interest rates with Jeff, but I think and Jeff Stopko, not Jeff. Hi, Jeff. Yeah, no, different Jeff. But I think he does touch a little bit on this question in that episode. So you can go back and listen to that there too. So, okay, what do we got next?
Who do banks sell mortgages to?
Who do banks sell mortgages to?
They can sell to investors. So either government-owned or government-sponsored entities, smaller nonprofit investors like Fannie Mae, Freddie Mac, Jeannie Mac.
The question is, why do banks sell mortgages? I guess that's the bigger question. Because I think when people are Googling, we're going off of Google, right? So I think what's happening is people are asking, well, why is my mortgage being sold?
Right. So
to somebody else
to free up some capital and give them the ability to give out new loans.
Yeah. And honestly, there's a thriving secondary market for lending like this. Dave O'Leary touches on this in his mortgage episode too.
A lot of the loans that are originated wind up being sold on the secondary market to other investors like Penny Mac or Truist or Wells Fargo until recently was in that game too, that secondary market thing. Because of that, the fact that these are bundled up and sold to sometimes multiple investors, and then eventually sometimes can wind up in, you may have heard this term thrown around a lot, 2008, mortgage-backed securities. Everyone involved in that process needs a certain level of comfort that the loans were processed and documented and handled in the same way, because these all sort of wind up, not all, but a number of them wind up as various forms of collateral down the road. And the investors all have to have a belief that the loans are credit worthy, there's going to be repayment without too much issue, things like that.
Lenders sell mortgages so they have money to lend to other borrowers, like Jeff just said. But sometimes it's not uncommon. Let's put it that way, for a bank to sell off a mortgage. So if your mortgage is being sold to another financial institution, don't panic. It's nothing you did wrong. Your rate's not going to change. Your term's not going to change. Like, nothing for you changes other than where you make your payment.
So the customer does know that their loan has been paid.
Oh, yeah.
So it's not like behind the scenes, your loan is now handled by a different company, but you're still paying that same bank or wherever you have your mortgage with.
Correct.
Okay.
Correct. So you don't really have a choice in the matter. If a bank decides to sell your loan, like, they own the loan, so they can sell it if they want to, but they can't make life harder for you in the process. So they can't, agree to an interest rate with you and then sell it to someone else, and then your interest rate changes.
Okay.
It's not fair.
Okay.
So if your loan gets sold, it's fine. That's pretty typical. But just understand that instead of you making your loan payment to whatever bank you went through to get the loan and to get your mortgage in the first place, now you're going to make your payment to that new company.
Okay.
Or that new financial institution. So here's the thing, especially within the first few months after you buy a new property, make sure you're opening your mail. Like, don't just assume it's junk mail, because you never know if you're getting a piece of mail from your new lender and you didn't realize that new lender was good. That happened to me.
Oh, really?
When I bought my house, I went through one bank, and they sold the loan off to another company, and I got the piece of mail, and that's how I found out they sold the loan, was I got the piece of mail from the new company. They say, "Hey, congratulations on being a customer of us."
Okay.
So make sure you're opening your mail.
And you're most likely not going to get like a text or an email. So
Yeah, probably not.
don't open that email or text that says, "Hey, we sold you your loan. Click here." Don't click that link.
Yeah. Just wait. You'll get something on paper. Trust me. When you're buying a house, you sign a lot of paper.
Yeah.
So, and then when you get that notice in the mail, make sure you're checking to see where the payment is going to go.
Okay.
So that you're paying the right place. If you set up automatic payments, make sure you're contacting the new servicer to make sure that they're still receiving the payments. That servicer also may be handling your escrow. So if you're in a situation where you're paying one payment that you consider your quote unquote mortgage payment, but that mortgage payment also includes your taxes for your municipality and your home insurance all in one thing, make sure your servicer has all that correct information. So you just want to make sure you're reading through everything when you get it to make sure they have everything right.
Gotcha.
Because ultimately, still your responsibility.
Yeah. Yeah.
So yeah, so if you get something like that, don't panic, but be aware of it and make sure that you check everything, make sure it's right.
Yeah.
So,
Sure.
Okay. So those were the top 3 who's on Google. Who do banks answer to? Who do banks borrow money from? And who do banks sell mortgages to? So
Sound like a banker, Al.
yeah. Hoo-hoo. It's that time of year. I sound like Dr. Seuss.
Yeah.
All right. So what do we got next? The right?
Yeah, we got the what's. So what do banks do with your money?
What do banks do with your money?
They
roll around in it, dive in it like Scrooge McDuck. That's what they do.
Yes. No, they can lend it to other customers, which is a big part of what they do with your money.
Yeah.
Invest it in assets like bonds and stocks and real estate.
Yeah.
Or they can add it to their cash reserve so that other banks can borrow it at an interest, and they're making money on that too.
Yeah. So I mean, let's be honest. I mean, we're going to talk. We have a 2 cents coming up. I think that we're going to talk a little bit about the differences between banks and credit unions and stuff like that. But banks are for profit, and that doesn't make banks bad. I mean, there's in a capitalist society that we live in the United States, every business is for profit for the most part. I mean, when you buy something at your grocery store, they're for profit. They're not selling you, your vegetables at cost. They're marking them up a little bit, and they got to keep the lights on. They got to pay their employees. They got to have insurance on the building. They got to plow the parking lot. If you live in an area where you have snow, which we do,
banks make profits so that we can give the customers a better experience or better features or something like that too.
Right. Yeah. So what do banks do with your money? Well, they mostly lend it out to people who need it. Is really what they're doing with your money. But by doing that, they're also earning the money that they need to to maintain everything and keep your money safe and secure and stuff like that. So
Right.
what's next?
What do banks look for when applying for a loan? We talked about this on episode 11 of Bank Chats, and also residential mortgages, part 1 and 2. That's episodes 1 and 2, going back really far.
Yeah, back to the very beginning. I bet, you know what? I don't know. Do they hold up? Do the first episodes hold up? I don't know if they do. It's like watching season 1 of your favorite TV show after you've watched 7 seasons. You're like, oh, this is so cringe.
Those are the pilots, yeah.
So what was the question?
So what do banks look for when applying for a loan?
Oh, yeah. Well, I mean, I think most people would know. I mean, they're going to look at your basic stuff. Like, they're going to look at your personal information, first of all. Make sure that you are who you say you are. So they're going to need some sort of identification. They're going to need to make sure your name and address and phone number and all that contact information is correct. Your social security number is who you say you are. It depends on the loan. Sometimes they'll ask you what the loan's for, but that's typically if you're getting a specific type of loan, like a car loan.
We have a vehicle loan, yeah.
But if you're getting a home equity loan or something like that, they don't usually ask what it's for.
Or they may ask, but they don't really. I mean, just to put it on a piece of paper what it's for, but
Yeah.
it's not going to change whether you're going to get that loan or not, you know.
Right. Yeah. I mean, if you say, "Hey, I'm taking a vacation with this," the bank doesn't really care if it's something like home equity loan. As long as it's, handled by your home's value, you're good. You can use it for whatever you want.
Yeah.
What else are they going to look for? I mean, they're going to look at your loan, the amount of the loan that you're asking for, whether or not they feel like you can repay it within the payment term.
So they're going to look at your credit score and your employment status, your income.
yeah.
So to make sure that you are credit worthy.
Yeah, that you don't have any, you're not currently dealing with a bankruptcy. You're not delinquent on your payments
Right.
for other creditors. Because if they pull your credit report and they see that you're behind on your 3 credit card payments, they're most likely not going to want to give you another loan because you're probably going to be delinquent on that too. If you can't pay your existing debts, what makes the bank think you can pay this one?
Sure.
And this is something that I think when we talked with Rusty in our consumer lending episode,
So episode 3.
episode 3.
Yep.
That it was really episode 3.
That was episode 3. It was residential mortgages part 2, and commercial lending were the first 3.
Wow. We talk a little bit about how if you're getting something like a consolidation loan. So can we talk a minute about consolidation loans? Right. You hear about that all the time. Like, you can lower your debt and you can try to get out of debt with a consolidation loan. And it seems counterintuitive, I think, sometimes to people that why would I take on more debt to get out of debt?
You take on more debt to get out of debt because you can consolidate into a much lower interest rate. I typically like to tell people, if you're going to consolidate debt, do it into a term loan where you're going to have a fixed interest rate to pay it off. Because if you just put it into a credit line to extend it and maybe pay interest only, you're not doing yourself any kind of favor, because all you're doing is extending the time and the interest savings that you potentially would get. So you don't want to trade debt for debt where it's not being paid down over a period of time.
Mm-hmm.
People can go through and consolidate debt. If they do it responsibly, they're going to have a term loan, pay it off. Hopefully they use a credit line to more responsibly for short-term borrowing needs versus long-term.
Right. Make sure you're telling your bank that.
Mm.
Because when they go to look at your credit history and your credit score, and they see a bunch of outstanding loans and debts out there, and you just say, "Well, I want another loan," and you don't tell them why, sometimes that can make a difference in whether or not you get approved, because they may be looking at your debt to income ratio and saying you can't afford another loan.
Yeah.
Right. But if you tell them, "Hey, listen, I'm using this to consolidate lending. I want to close those other accounts, or I want to pay off those other accounts by using this loan," well, that's a different story.
Yeah. It makes it look like you're trying to do better. Yeah.
Yeah. Well, not only that, but you're not going to have those payments because
Right.
you're going to have
Yeah.
one, right? So,
One loan now instead of 6.
yeah. So they don't really have to consider those payments because those payments will all zero out
Yes.
when you get this new loan that pays those off.
Yeah.
Right. So keep that in mind too. Don't just assume that the bank is out. Like, so many people assume the bank is like out to get you. Like, the bank is there to help you.
Yeah.
Okay. So what?
Yeah.
so,
And you cover the debt to income ratio. So what do banks do with repossessed cars? This is a good one.
Yeah, what do banks do with repossessed cars? So, again, I want to stress this: the bank is not out to get you.
Right. We don't want your car.
We don't want your car. We would much rather you make your payments on time and keep your car.
Yes.
That's the whole point. So not only that, but if the bank has to repossess a car, which unfortunately does happen from time to time,
Mhm.
it is probably not even the second or third best option for the bank, but eventually it may get to that point.
Yeah.
To repossess a car. Typically, when a bank repossesses a car, they'll employ a third party auction, like an auto auction company,
Mhm.
and they'll pay them a commission to sell the car at auction.
Yeah.
So
And that's
the-
usually a private auction that's not open to the public. You know, you have to have a dealer status. You know.
Yeah. And typically the prices on those are way below like steep discounts.
Oh,
when
yeah.
You end up buying a car at one of those auctions. So the bank is typically not even they're probably still taking a loss. They're just not taking as big of a loss
Sure.
as if they didn't sell the car or repossess the car in the first place. So even when you think the bank has won by repossessing your car, chances are the bank is still losing money.
Yeah. But I mean, they can sell, outright to someone if they want the car too. That doesn't happen as often, I wouldn't imagine, but
I would imagine that probably happens a lot more with smaller community banks
sure.
where they have like one branch in a small town and they sit the car in the parking lot and put a for sale sign
Yeah.
on it.
Yeah.
We do live in a relatively small town, and years ago, I do remember a local bank doing that. They had like a couple cars in their lot.
So
they were selling.
my dad was telling me that same thing.
That's typically what happens. So,
Okay.
yeah.
Cool. When do banks make money?
I mean, we kind
We kind of did that one already, yeah. We didn't talk about fees that banks get from certain accounts.
That's true.
Like checking accounts, opening certain checking accounts. You have to, pay an annual fee, or if you have a trust department that charges fees, interchange fees on debit card ATMs.
Yeah.
It's not a lot, but that's still a profit for the bank.
Yeah.
Yep.
Surcharge fees.
Yeah.
Yeah. Typically, surcharge fees would be on if you're using if you're not a customer of the bank.
Yeah.
And you're using if you're using an ATM that is not your bank's ATM, you're probably going to pay a surcharge fee. They're getting higher. I mean, it used to be, $1 or $2. Now a lot of banks are sort of being forced to raise those surcharge fees, mostly because ATMs aren't being used as often.
No.
So, and it costs a lot of money to maintain that ATM network. So yeah, so a lot of times that's what it is. And you can sometimes avoid those by going to, some banks will do surcharge free,
Some, yeah.
Yeah. But it's funny. It's just like anything else. If you're in a sports stadium or a casino or something, you're going to pay much higher surcharge
Oh, yes. Yeah.
for that money than you would if you just went down to your local convenience store or something like that. But so yeah, there are fees. That's true. You know,
Any other fees that banks normally would make?
yeah, no, I don't think so. I mean, primarily, the biggest income for banks is the interest income that they generate on loans and stuff like that. But you're right. There are other things like that do generate income for the bank, for sure. So,
Okay. When do banks close on Saturday? That's a trick question.
a little subjective, yeah, but it's there, so we'll ask it.
Yeah.
I'd imagine a lot of people are asking when do banks close on Saturday because if it's a Google search, they're probably just trying to find out when their personal bank closes.
Yeah,
Saturday.
they left out their actual bank name.
Yeah.
Yeah.
So I guess that depends. You got to ask your bank. I mean, some banks are not open on Saturdays. Most banks have at least a few branches that are open, usually till like noon.
Or they'll have drive-through hours or something like that. They not lobby hours. Yeah.
If you're one of those banks that's in like a grocery store or a Walmart or something, maybe you're open a little later.
Yeah.
A little longer because you're right there and there's a lot of foot traffic. But we could take this opportunity to talk a little bit about holidays.
Bank holidays.
Bank holidays.
Okay.
Because if you work for a bank, you get 11 free days a year of vacation. Perk. Yeah. A little bit of a side perk working for a bank. Some of those are holidays that a lot of people are off anyway as well, like Thanksgiving or Christmas.
And
4th of
those
July.
And those are closed because the Federal Reserve is closed as well.
Correct.
Okay.
Yeah. And you're also not going to, even not that it has anything to do with your bank deposits, but even things like the stock market are closed.
Oh, yeah. Sure.
Like basically Wall Street's shut down. I mean, there's nothing like that happening. The post office is closed. So a lot of anything federal is going to be closed on federal holidays. Other holidays though, well, so New Year's Day, almost everybody's off New Year's Day.
Yep.
But Martin Luther King Jr. Day, so banks are closed. President's Day in February, banks are closed.
Mm-hmm.
And then you kind of skip ahead to Memorial Day. So Memorial Day, we're closed on Memorial Day. 4th of July,
Juneteenth now, yeah.
Juneteenth now in June. And then 4th of July.
Yep.
Labor Day.
Mm-hmm.
Columbus Day or Indigenous Peoples Day, depending on your preference.
Yep.
Veterans Day, and then Thanksgiving and Christmas. Right, so that's 11. I always want to put New Year's Day at the end, but it's actually the first. And it's actually the first.
We see it at the end of the calendar, but yeah.
Yeah. So there's those. So if it makes anybody feel better for those of you that have to work on, say, for example, President's Day, when the banks and the post office are off and you're all still working, the day after President's Day is kind of a nightmare for us because we're making up for everybody being at work the day before and we weren't.
Yeah.
So we're doing double work that day with all the extra deposits and things like that. So if it makes you feel any better, even though we're closed, we're working twice as hard the day after.
Fair enough. Yeah.
What do we got next?
When do banks update accounts?
When do banks update accounts? How would you interpret that question? When do banks update accounts?
So if I put a deposit of $100 in a checking account, do I automatically see that $100 deposit on my online banking? Or
okay, so you're
that's how I take that.
So you're so that's probably right. So I'm guessing that's probably how they're interpreting that question, because like update accounts could mean like, well, when do they change their checking accounts? Like I don't know. But
yeah,
if you're right. If people are asking when will my account reflect the activity that I have performed,
that's a good way to put it. Yeah. Yep.
Usually overnight.
Okay.
Usually overnight. There are some banks that are going almost real time, so that like you make a purchase, you log into your online banking 10 minutes later and you see the purchase there. Sometimes it depends. It also depends on the retailer.
Yeah.
Because not every retailer transmits their transactions in real time, believe it or not.
Oh.
So you might have, especially smaller stores, smaller businesses, mom and pops.
Mm.
What they'll do is they'll sort of do all their transactions for the day or for the half a day or something like that. And then they'll transmit all of those as like a bundle of transactions.
They're batching them. Yeah.
Batching them out.
Yeah.
So if you make a purchase right after they've run a batch at say 1 o'clock in the afternoon, and they've just run a batch at 12:30, and they don't run their next batch until 6 p.m. or something like that, then you may not see that transaction. Even if you are a real-time bank,
Okay.
it may not show up right away.
But a good general rule is, every 24 hours or so. Okay.
Yeah. So, and then again, remember your bank holidays, right? So you're
Sure.
So these are business days,
Yeah.
right? So we've talked about business days before,
Yes.
on one of the episodes.
Yeah. On a 2 cents.
Have we ever talked about business days?
No,
we
No, we haven't.
Explain this.
My understanding.
Yeah.
So a bank can deposit money up to a certain time of the day. Anything after that time, whether it's during the business hours, is considered to be on the next business day, correct?
Yeah. Now, a lot of banks are now going to same day.
Okay.
Right. So I mean, the rules have changed a little bit based on like whenever I first got into banking years ago.
Yeah.
But essentially, yes. So a business day is going to be a day when the bank is normally open for business, right?
Mm-hmm.
So that's going to be a Monday through a Friday traditionally.
Okay.
If it's a holiday like a Memorial Day or a Labor Day that falls on a Monday, that is not a business day. Saturdays, even though some branches are open on Saturdays for most banks, that is not considered a business day.
Okay.
Right. So a business day is a Monday through Friday, normal working hours, that sort of thing. So what people don't always get is that the next business day for a deposit might be if I deposit something, say through mobile banking at 10 o'clock at night on a Friday.
Mm-hmm.
Well, most banks are already closed for the day. So they're on Monday's business,
Mm-hmm.
which means that your deposit may not show up until Tuesday. So even though you're depositing at 10 p.m. Friday, your money may not show up in your account until Tuesday morning.
Mm-hmm.
And yet that's still considered one business day,
Yeah.
right? And then you see, when you start adding holidays and things like that into the mix, sometimes it can be 4 or 5 days before, even though the bank considers it one business day, it might be multiple days. If it goes over a weekend or something like that, it can be calendar days significantly more than business days.
But keep that in mind too. So, updating accounts could vary depending on weekends and bank holidays and
Yeah.
stuff like that. So where do banks get their money to lend? Is that right?
Yeah.
Where do banks? Well, from depositors.
Yeah.
I mean, we kind of touched on that already.
Right.
When we talked about, who do banks answer to and where do banks get, do with their money?
And we get money from Federal Reserve or other banks,
Yeah.
buying securities.
Yeah. But I mean, really, I mean, all of those are true, but I'd say probably at least 65% of the money that we lend out is from depositors who put their money in the bank to begin with.
Right.
So regardless of what bank you're with, I'm not saying this to be, selfish. I'm just saying any bank, like you're helping your neighbors in your community by putting your money in the bank. Because if you don't put your money in the bank as a deposit, the bank can't lend as much money out to people that need it.
Yeah. They're going to be more picky. Yeah.
And especially if it's a community bank like us. Like if you're Chase or Bank of America or something, I'm not trying to disparage them, but they're giant megalithic banks that cover multi-states, multi-countries. But if you're a small community bank, consider banking with your community bank, because your community bank is much more likely to be lending to your local community that needs it.
Yeah. Well,
Now,
and think of it this way too. Chase is not picking up garbage off the side of the road, but your local community bank may on the weekends help the community in
That's
other
true.
ways. Yeah.
yeah, absolutely. So, yep.
Where do banks store their money?
This is an interesting question.
It depends on how you look at it. Yeah.
Yeah.
Physically or
Well, so I think that's the difference now, right? Is, we used to have this world where everything was cash, and you had Fort Knox that had like 75 gates and all these guards. And all
Yeah.
that, and I'm sure it probably still does. But banks are not like that as much anymore. I mean, so here's the thing. Every bank is going to have a vault,
Mhm.
right? Which is a protected area, very difficult to enter without permission.
Mhm.
Yeah. And, so a bank will keep cash on hand for people that need cash.
Yeah.
Or want cash.
Yeah.
So banks do still have vaults for things like that. But in terms of all the money a bank handles, it's so much of it has gone digital.
Mm-hmm.
I don't want to say it's not physically here, but it's not as tangible as it may have been 100 years ago.
Yeah.
Let's put it that way.
Yeah.
That doesn't mean that if you go into your bank and ask for your money, you won't get it. You will,
Mhm.
right? But it might be issued to you in the form of a check, especially if you're dealing with a large amount that sort of you unexpectedly demand from the bank. If you go in and say, well, I want to withdraw all my money and it's $2 million worth of deposits, they're not likely to have $2 million on cash on hand, first of all.
Oh yeah. Right.
But on top of that, it's a safety issue. They're not going to hand you $2 million in cash and run the risk that you're going to walk out onto the sidewalk and be robbed.
Yeah.
Right. So it's much, much safer for the bank to issue a cashier's check made to your name so that you can take that money wherever you want to take it and use it and whatever. So banks store money electronically, for the most part.
Yeah.
They'll store it with the Federal Reserve banks.
Mhm.
To make interest on that. Sometimes so the bank will sort of deposit into another bank and then earn interest, right?
Yeah. Google had an interesting take on it a little bit.
Yeah.
Well, okay.
These are Google questions after all.
I'm assuming an interesting take on it, but they said loans. So your bank is keeping its securities in loans. So even though the bank doesn't physically have that money, it's keeping it safe with another person.
Oh, that's a good point.
That's how I
I like that. Yeah, that's true. You're right. I took that a different way, but that's a good point. You're right.
Yeah.
I mean, really, if the money's lent out to another person for whatever, then really your money is
safe with them. We're done with the wheres. We're on to the whys.
okay.
Why do banks pay interest on deposits?
Yeah, why do banks pay interest on deposit? Well, because so I mean, I feel like a little bit of a broken record here because we kind of keep coming back to this. I think some people are Googling the things, they're asking the same question in different ways.
Yeah.
But banks pay interest on deposits to incentivize you to put your money with the bank.
Yeah.
Right. The bank needs deposits to be able to turn around and make loans to help the community, but also to make money for the bank, because that's primarily, the interest on loans is where we make a lot of the money that we generate to employ people like yourself and me and keep the lights on and all that stuff. But that's why, I mean, if there was no incentive to put money in the bank by earning money for yourself in the process, then you would park it somewhere else.
Yeah.
Right.
Keep it under your mattress, like we said not to.
Yeah, don't do that. That's so dangerous too. Yeah. Not only from a theft standpoint, but God forbid your house burns down or something like that. You don't want to lose all your money because you stored it under the mattress. That's terrible.
And if your financial institution is FDIC insured, then your money is insured that way too.
Absolutely.
Yeah.
Yes. Excellent plug. All right. Next.
Why do banks put a hold on checks?
Why don't we ask Serena Williams?
Yes, we talked about that on 2 Cents, episode 10.
So have you ever had a hold put on a check?
I don't think I've ever tried to deposit a check large enough that would require a hold, but
Fair enough.
I mean, I know what have an idea of what they are.
Okay.
They're going to hold the check to make sure that those funds are available.
Yeah. I mean, like, honestly, before I got into banking, I had no idea that they would ever hold checks. I just assumed that when you took a check to the bank, they just deposited it in your account and you went on your way.
Yeah.
But there are people that you know, for whatever reason, whether it's they get an inheritance or they get an insurance payout. Maybe it's that they got a, I don't know, some sort of a windfall, whatever it is. They won the lottery. They got a big bonus at work. For whatever it is, if somebody brings a check into the bank and says, well, I want to deposit this, and it's outside the norm of their normal deposit, you know, behavior, chances are the bank's going to say, well, we need to put a deposit hold on this, right? And that can make people irritated sometimes because it makes you feel sometimes like you're doing something wrong.
Yeah. Yeah, I can see that.
Yeah, and I don't think that that's true. Like, in most cases, people aren't doing anything wrong. They're just legitimately trying to deposit something that they feel is true. But in some cases, you know, that check, you know, the bank wants to make sure that the funds are actually available, the check doesn't bounce, so they can put a hold on it. Now, normally, according to Regulation CC, okay, most banks, what they'll do is they have to provide you with $200 of that deposit the next business day, and then traditionally, the remaining amount of the deposit, whatever it is, by the second business day.
Very good, Drew. So that's why you put holds on checks. That is. Why do banks charge an overdraft fee? I mean, I think it goes back to what you said about fees. Right? The banks do need to make money. And, you know, I know this may not be as popular of a notion as it once was, but ultimately you are responsible for you. Right?
Yes.
So if you're overdrafting your account, that means that you are using money that is not yours.
May teach you to be a little more careful.
I mean, really, that's what it comes down to. I mean, you're buying something with money that you don't have.
You're taking out a loan that was not approved.
Yeah, right.
Yeah.
So the bank oftentimes, and you can, first of all, let me put it this way. With your bank, you can instruct the bank that you do not wish to opt into something like overdraft protection, which means that if you hand somebody your debit card and there's not enough money in your account to cover whatever purchase you're making, it will be declined. Right?
Yep.
Now, as a courtesy, if you opt out of that overdraft, you know, sort of
Protection
or whatever it is, your bank may call it something different. You will be declined, and you will never be charged that fee because you will never overdraft your account. Right? A lot of people don't want to be embarrassed. They don't want to go to a store, hand their card over, and have it be declined in front of a line of people behind them, and then have to try to figure out, okay, well, now I need to take 75 things back out of a bag at the grocery store because I can't afford to pay for them, and then they have to rerun your tape, and then it's a whole thing, and so people don't want that embarrassment, right? So some people will choose to allow the bank to let the transaction go through, but if it, you know, if that transaction is too far beyond what your account can handle, then your bank will usually charge you a fee for that courtesy, right? Because you're
like we covered you, yeah.
You're not using money that is not yours to make that purchase at that point. So that's why. I mean, really, it's whether or not you want that sort of courtesy from your bank to avoid embarrassment. And a lot of banks, you know, have different thresholds for that too. So if you, for example, are, say, you know, some banks will say say $3. Like if you're less than $3 beyond your limit, right?
We're not going to charge you, or
so, some banks won't charge you as a, okay, you only went like $2 under, like, you know, whatever. But every bank's different. Some banks charge you at a penny. And some banks will maybe go up to like, say, $5 or something like that without charging you. But find out from your bank.
I'm okay to be embarrassed. I'd rather not have to pay a fee for, you know.
Yeah, and that's an option.
Right.
But you got to tell your bank that. You got to say, look, hey, listen, I'm good with you not allowing this through.
Yeah.
Knowing that I will never then overdraft my account.
Yeah, and your bank should ask you that at account opening, usually.
Yeah. And you can make that change, I think, pretty much any time, assuming, of course, that you're not delinquent on a bunch of other stuff in your bank.
Sure.
So, yeah. But again, these are general rules. They are not, or general guidelines. They are not hard and fast rules for every bank.
Yeah.
So what's our next question?
Okay, so why do banks exist? So the origins, I found this on Google.
Oh, go for it.
So the origins of banking can be traced back to ancient Mesopotamia, around 2000 BCE, when temples served as the first known banks. Priests would lend out valuable items and grain from the temple to local farmers and merchants. I thought that was interesting. So
That is very interesting.
our first banks were temples.
Now here's the addendum I can add to that.
Okay.
Again,
You're the history buff.
full of useless knowledge. So you'll also find, starting around that time in ancient Mesopotamia, you would find that there were people that acted as a sort of a bank in terms of if you were traveling long distances from one city to another, one city state to another,
Okay.
it could be very dangerous. You would have highwaymen, which are basically robbers along the highway. So if you packed up all of your stuff and all of your money into your wagon and you're traveling, hundreds of miles to another city state, which again, you got to remember, this is ancient Mesopotamia. That could be a weeks-long, months-long journey. It was dangerous to have all your
Sure.
stuff with you. So,
Yeah.
so what they would also do is they would essentially go to someone who would evaluate what they had and sort of come up with a number.
Okay.
So everything you have here is worth X dollars. And they would write a sort of I don't want to say a loan, but sort of a script that would say, I, Jeff McTavish,
Mhm.
swear that Drew Thomas has X number of dollars in value, right?
Oh,
They
okay.
would sign it. They would have a partner in other city states where once you arrived at your destination, you would go to that partner and you would hand them that piece of paper
Okay.
or wax tablet or whatever it was. And they would say, oh, I see that my partner in X city state has vouched that you have this amount of money. Then they would give you your money.
So this is for a
Split
loan.
amount.
This is for a loan or
It was basically a way to transact, like to sort of like not have to carry your money. You would give all of your stuff to that first merchant,
okay.
and then when you got the other side, they would basically give you that equivalent value in coin or whatever so you could go rebuy whatever you needed to rebuy.
Okay.
So that was sort of like your first sort of bank process of being able to deposit in one location and withdraw at another
Okay.
by doing it that way.
Okay.
Yeah.
Cool.
So yeah, interesting stuff. At least it is to me. It's not to anybody else, but it is to me.
No, that's interesting. Yeah.
All right. I think we're making progress. I think we're down to the hows, right?
We are down to the hows. Yeah.
All right.
How do banks make a profit? We've talked about that. Yeah. Interest on loans, fees.
I don't think we need to go
No.
through that again. All right. Next.
How do banks create money? That's a
I don't know what that
weird questions. Yeah.
I mean, banks don't create money.
Right.
The U.S. Mint creates money.
Right.
If you're talking about the tangible form of money, whether it's a printed dollar bill or a coin, right? So the U.S. Treasury would stamp coins, and I mean they create money.
So Google's answer to that was banks create money when they lend out excess reserve that depositors give them. So it's not really creating money. It's
I would call that more
growing money.
value.
Yeah, creating value, growing money for one bank from another bank.
Yeah, something like. I mean, I guess yeah.
Yeah, that was worded a little odd.
Whichever way you took that question, you can either choose my answer or Jeff's answer, and you have your answer. So there you go.
Perfect. Yeah. How do banks investigate unauthorized transactions?
Ah, that's interesting. So this might be a good time to tell people to reference some of our cybersecurity
Yeah.
episodes. Check out the guys from St. Francis. You got Kevin Slonka and
Mike Zamboni.
Mike Zamboni. We have a lot of good stuff about fraud and things like that, because investigating unauthorized transactions, and the most recent one that we did with them in October of this year, just 2 months ago,
So episode 16.
focuses a lot on if you want to get into that industry as a career,
Mm-hmm.
because it's becoming a big deal.
It's so important. And for anybody looking to get into the field, note this fact. In order to protect something, you have to understand how it works. So you have to understand how computer networks work, how organizations use technology, how your attack surface can expand whenever you add new technologies that might increase functionality for people. So it's really that core understanding of networks, computer networks, how they work, and getting that knowledge first.
I think that's an important distinction. I've used this example with other people, and I apologize if I've used it with you guys too, but I attended a conference a number of years ago, and there was a keynote speaker who is the director of a generational studies organization. They look at how different generations respond to different things, right? And try to interpret how to market to them and what their interests are and so forth. And he asked the audience, he said, okay, I want you to finish this sentence. He goes, young people are computer And most people said savvy, right? It's a computer savvy. And he's like, actually, that's not true anymore because young people are not computer savvy. Middle-aged people are computer savvy. Young people are computer dependent or technology dependent. They don't understand how it works. They just know that it does work.
That is very true.
We talked a little bit about where do banks keep their money, and I said, it's not like it was 100 years ago where there's this giant bank vault that people would you watch the old westerns where they bank robbers would break into the vault and steal all this money. Like it has become sort of a cyber version of that. Cyber criminals are out there trying to steal your money either directly from you by asking you for your personal information, your passwords and so forth, and then hacking your accounts. And if that happens, then the banks are usually trying to find out whether that transaction was legitimate or not.
Yeah. Or they're trying to prevent that transaction from going through to begin with.
Yeah.
Right.
Yeah. So
I guess there's two ways to look at this.
Yeah.
So Google went the cyber route.
Okay.
But I think of the physical route. So that's another reason why we put, say, holds on checks. So you have a bad check. We're going to put a hold on it till we make sure that check is going to clear,
Yeah. What's that called?
A check hold?
Yeah, but what's the fraud called? Check kiting.
Check kiting?
Check kiting. You don't know check?
No, I don't know check kiting.
So if you've ever watched Catch Me If You Can with Leonardo DiCaprio and Tom Hanks, it's about a guy named Frank Abagnale Jr.
Okay.
And Frank Abagnale Jr. actually ended up working eventually for the FBI as a consultant and was responsible for a lot of the things that you now see on checks to prevent fraud.
Oh, okay.
Including like watermarks and like the heat sensitive things and things because he probably was one of the biggest perpetrators of check kiting. So the idea was, back in the 60s, when you wrote a check, it would go to a federal bank as it was routed.
Okay.
Right. So you have that routing number on your check.
Yeah. Right.
That number tells banks how to route the check for payment.
Okay.
Okay. Today it's done digitally. So when you go to your grocery store or whatever, a lot of times they'll just zip that check through a little reader. And then from that point forward, they'll even hand the check back to you.
Oh, yeah. Right.
Right. But back in the day, back in the 60s, that check literally got put into a mail bag and got sent to a federal bank. And then that federal bank would forward it on to the bank that it was from. And it took time.
Okay.
Right. Sometimes it would take 2 weeks. So what would happen is people figured out that they could write a check for let's say that I have $100 in my account.
Okay.
I could write a check for $1,000. Right. And I knew that I had 2 weeks
To get that rest of that money
to
in
get the
there.
rest of the money in there.
Okay.
Right. The check kiting comes in where you have, I can't believe, I'm not trying to teach you how to do this. I'm just telling you what it is.
Yeah, I'm learning something.
Yeah, the check kiting comes in where you have multiple accounts in different federal zones.
Okay.
So you would have a bank account in California, a bank account in New York, a bank account, say, in Florida. Okay. And you would write a check to that bank for $1,000.
Okay.
Right. Knowing that it would take 2 weeks to get there. After a week and a half, you would write a check from Bank B for $1,000 to cover your expenses from Bank C.
Okay.
At Bank C, you wait a week and a half, you write a check from Bank C to cover the expenses in Bank A. So that money floats between the banks, but you never actually have that money.
Okay.
It's always
So it's a timing thing. Yeah.
It's always kiting over. So they call it check kiting.
Okay.
The idea of you float this check up in the air, there's nothing there. But by the time that it gets to the bank and that expense comes out, that money comes out, but the money leaves again, then goes to another bank, and you're not actually using that money. And so it's fraud.
Yeah. Oh yeah.
It's absolutely
Definitely.
fraud. So
That's harder. And that's harder today with everything being digital. Yeah.
I would have to argue it's almost impossible to do that today. Thankfully.
Yeah. Oh yeah.
But yeah, go back and watch Catch Me If You Can. If you've never,
I have never watched it. No.
great movie.
I will have to go watch
It's
it.
a little on the longer side, like budget, like 2.5 hours.
Okay.
But
That's fine.
some of it's a little embellished, but that part of it is pretty accurate.
Yeah, I'll have to go watch it.
All right.
We touched on the digital fraud part. Adding to that, before that transaction goes through, sometimes your bank will look, or most of the times your bank will look at background information, like the date that transaction went through, or the IP address, or to make sure that it's really you who did that transaction.
Yeah.
But there are some cases of like friendly fraud, it's called, where a card holder makes a purchase by accident. Sometimes this is unsupervised child making an in-app purchase.
Oh yeah, that
Letting a free trial run out and into a paid period. And we covered that a little bit on an episode of 2 Cents.
yeah, about not having all those subscriptions right there, right? Yeah.
Forgetting about an automatic renewal subscription or buyer's remorse. Yeah.
Yeah.
So there's some cases of fraud that are not really fraud, but your bank may flag it as fraud. It's just precautionary. So it's probably a good thing that, it's not a bad thing that, you're getting flagged for fraud. Sometimes it's a good thing your bank is being very cautious. Yeah.
Yeah, that's absolutely true. Yeah. You know what? I would have to probably guess this is a good time of year for a lot of those subscriptions and things like that. Like, don't let those just continue to roll over if you're not using them. Save a ton of money sometimes by just getting rid of stuff you're not using that you've forgotten about.
Yeah.
Yeah.
Well, and that's a good time of year too. I've already started getting the text messages from UPS or USPS. Your parcel has been stuck at this center. Click the link. I mean, because everybody's buying stuff online right now. So who knows, hey, that could be a legitimate thing. It's usually not, but
Yeah.
people get tripped up on those things.
Yeah, you're absolutely right. Yeah, be careful about that stuff. And just one other PSA, this is the time of year too where people get desperate for something. Their child wants a particular toy, their husband wants a particular whatever, and you start seeing that item, whatever it is, on some website you've never heard of before, and they say, "Oh, well, they're sold out everywhere else, but we have them here."
Right.
And if you just give me all of your credit card information, I'll be happy to send you one. And it's just, if you're not, use legitimate websites.
Yeah.
If every store in the country, if Amazon and Walmart and Boscov's or Macy's or whatever, if they're all sold out, but some yada yada website says they have 7,500 of them, question it. It's probably not legit.
Right. Yeah.
All right.
Yeah, I think we're at the end of our who, what, where, when, whys, and hows.
Well, you know what? This has been a fantastic year. It has. And Jeff, I mean, you have definitely become a legitimate, honest to God co-host of the show. We really appreciate that. I mean, honestly, you do a ton of work behind the scenes with all the editing and production and everything that you do. So thank you very much.
Well, thank you.
I definitely appreciate it. It is appreciated. And and if you haven't been listening, well, that was a good time to start. Go back and check out some of the episodes that we mentioned. Check out ones we didn't mention. What were some of your favorite episodes?
Oh, George Campbell, definitely.
Yeah, George Campbell, that was a good episode.
You gotta love that one.
Yeah, definitely.
Come on, it's George.
Maybe we can get George back again. You never know.
We'll tag him in this.
We'll tag, yeah. Maybe if he listens this far, we'll be like, "Hey, George, you're invited back."
Yeah. How about yours?
I like a lot of the longer form episodes, like the George Campbell one. They're very informative, but I like some of the 2 Cents stuff that we do too. Even though I looked uneducated, the Gen Z terminology was a good.
That was a fun one.
That was a fun episode.
That was a really fun one. Yeah.
All right.
The St. Francis guys were good too. I always enjoyed them.
They're great friends of the show. They really are. And now that our show's been on long enough, we can say stuff like that because they've been here multiple times.
They have. They sure have.
So they are definitely great friends of the show, and we want to have them back again.
Yeah.
So So happy holidays, Jeff.
Happy holidays. Happy New Year.
Happy New Year.
And we'll talk to you next year.
Okay.
This podcast focuses on having valuable conversations on various topics related to banking and financial health. The podcast is grounded in having open conversations with professionals and experts, with the goal of helping to take some of the mystery out of financial and related topics, as learning about financial products and services can help you make more informed financial decisions. Please keep in mind that the information contained within this podcast and any resources available for download from our website or other resources relating to bank chats is not intended and should not be understood or interpreted to be financial advice. The host, guests, and production staff of Bank Chats expressly recommend that you seek advice from a trusted financial professional before making financial decisions. The host of Bank Chats is not an attorney, accountant, or financial advisor, and the program is simply intended as one source of information. The podcast is not a substitute for a financial professional who is aware of the facts and circumstances of your individual situation.
Our goal with the podcast is to be entertaining and educational. Sometimes we're more successful with the one or the other, but I think that Bank Chats has begun to really grow into its clothes, for the lack of a better phrase. It may not always be appealing to make smart decisions about money. Saving for a rainy day instead of buying the latest gadget or toy, for example. But being financially responsible is going to make you far happier in the long run. I sincerely want to take some time to thank Jeff McTavish for all of his hard work in being the producer, editor, and co-host of the show. He makes my silliness work. I also want to thank those of you who have downloaded and listened to the podcast this year. Believe it or not, episodes of the show have now been downloaded and listened to more than 2,000 times. Hopefully, we've made a difference. AmeriServ Presents Bank Chats is produced and distributed by AmeriServ Financial Incorporated. Music by Rattlesnake, Milo, and Adria Kalitkin. You can find all of our episodes on ameriserv.com/bankchats or by simply searching for us on your favorite podcast app. For now, I'm Drew Thomas. So long.